Hello everyone, welcome to elliottwaveforecast.com YouTube channel. Today is September the 13th and the chart of the day for today is the Nasdaq. This is a 60 minutes time frame. Alright, so we can see right here we ended with 3 in the minor degree here, and this is your wave 4. Since then we made the new high above wave 3 already. So we are now within the wave 5, and within wave 5 currently ending 105 over here. So now pulling back to wave 205 before higher again to continue higher to finish wave 5 in the minor degree here, as long as we stay above 15158. Okay, so this is the invalidation level for the extension higher in the shorter cycle here. Now we're going to discuss a couple of other possibilities here. Now first of all, let's zoom out and look into the 4-hour time frame. Now remember this 3 and 4 here. Okay, so this is the same 3 and 4 in the 4-hour. So here I'm gonna label this date here August 18. Okay, August 18 here. So we're talking about the rally from August 18 low. As you can see in the rally there so far, if you count the number of swing, this is a 1, 2, 3, 4, 5. Okay, forget for the time being about the label, Elliott Wave label. Just count the number of swing. So we got this 1, 2, 3, 4, 5. Right. So 5 swing is not a corrective sequence, right? Corrective sequence is always 3 swing or 7 swing, but 5 swing is a motive sequence. All right. So that means that most likely, because we have a 5 swing up from August 18, most likely we should extend higher eventually. We should be able to break above this peak again. But then in order to figure out the possibility on the alternates, we need to take into consideration a couple of other things. First of all, one possible option will be, instead of ending 105 here, this could be your entire wave 5. Right? So if I go back on the 4-hour, what we are seeing here is that we are still within the wave 5, and we could extend higher, something like this, 2, 3, 4, 5 before ending wave 5, right? But the other option is actually we ended already with 5 here, which is possible since you already have a 5 swing. Now if that's the case, then basically this is ending. Remember, because it is a 5 swing, which is not corrective, then this should end a motive label, right? So this could be ending with 1 in a higher degree. A higher degree than the minor degree is intermediate degree. So that's one possible option there, and that means we are actually now correcting not just this, right? We are not correcting only this, but we are correcting this entire rally from August 18. So the correction therefore can become a bigger correction. So we can have a bigger 3 pullback. Let's say this could become 1, 2, 3, 4, 5 like this, and this is ending A, right? And then you got a B and a C, and then higher again. So that's another possibility there, which is possible, which is we are looking to correct larger degree, correcting the entire rally here before we go higher, right? And then the primary count of what we are showing here for now is that we might still extend higher within 5. So that in that case, in this current view, the pullback is not going to be a bigger pullback. So the pullback is still within with 5. So the pullback is only correcting this with 1 here. And then we have a 3, 4, 5 coming up, as long as we stay above here. So that's one alternate. Now what about, is there any other alternate? Some of you might be thinking, oh, it is a bearish market, right? I mean, some of you might have a bearish bias. For example, is it possible that we actually sell off and break below August 18 again? So nothing is impossible, but because of the 5 swing here, probability wise, this should be looking for more upside, breaking above this peak again. Now, is there any way we can have a corrective structure coming up from August 18? Well, there is one possibility of a corrective structure, but then that still requires another leg up, even if it is a corrective structure, right? So that possibility is a 7 swing, which is a WXY. In that case, we will be looking into something like this. Again, guys, the reason I'm giving alternate here is not to confuse you, is for educational purpose, and this is not to say that we are taking this view, right? but the alternate is there, and you need to understand the alternate to be able to understand the risk, right? Whatever you want to do, you need to understand the risk that you're taking, right? So this is a possibility here in which this is not 1, 2, 3, 4, 5, but this is a 5 swing within a corrective structure. So this could be with A of Y, and then this is with B of Y, and still, even in that corrective structure, you still need to see one more leg higher to finish a 7 swing like this. This is what we call a double zigzag, right? You have a zigzag here, you got another zigzag. Now in that case, you notice we are almost going to be retesting the peak here, right? Because we need another leg up, so that extension higher here can retest this previous peak, and then maybe we have a double top in that case, and then it fails to break higher and then suddenly sell off again. So that's the corrective structure. If you're bearish, for example, that will be the possible count for you. But again, because the right side, or so far we've since been bullish indices since many years ago, there's no reason to be taking the bearish bias whenever you have a fast swing up from the lows. So that's why we are taking the more aggressive view here, calling for extension higher, right? And again, regardless whether this is corrective or motive or impulsive or diagonal in this case, even within a corrective structure, most likely you're still going to have to break above here, because again, a 5 swing is not a corrective structure, so most likely we still can see another leg up at least. Okay, so that's the update here, and as always, if you want to get further updates on the Nasdaq or any other indices, stocks, Forex, commodities, feel free to check our service. We have 14 days trial. The link is in the description of the video. I'll see you all again next time, and have a nice day, everyone.